Hello, and welcome to the Fundamentals of the Supervisory Committee training. My name is Judy Scott. I'm a member engagement consultant with the League of Southeastern Credit Unions. Let's get started. Here is an organizational chart of what a credit union looks like normally. We have your members, board of directors, manager, executive officers, supervisory committee. They work with the board of directors. They're overseeing the credit union to make sure that everything is done correctly. Supervisory committee training overview. Functions of a credit union. Why do we have a supervisory committee? We'll look at overview of regulatory requirements and structure, general responsibilities and powers, supervisory committee work plan, supervisory committee audit, purpose and components, handling member complaints, supervisory committee performance. I often refer to the supervisory committee as the police department of a credit union. General functions of a credit union. You have your board of directors, your management team, supervisory committee, and your credit committee. Regulatory requirements and goals. All credit unions are required by law to have a supervisory committee. Regulation 715 of the NCUA's rules and regulations states the supervisory committee shall be appointed by the board of directors and shall consist of not less than 3 members nor more than 5 members, of one who may be a director, the other than compensated officer of the board. Sets forth supervisory committee audit requirements consistent with the NCUA Membership Access Act. Regulatory requirements, state charters. Alabama Credit Union Administration states Section 8 of the ACUA Administration Final Regulations, Section 5-17-13, the Code of Alabama from 1975, provides the powers and duties of the Supervisory Committee. Florida Office of Financial Regulation, OFR, 2010 Florida statutes, including Special Session A, 657.026 Supervisory or Audit Committee, provides the powers and duties of the Supervisory or Audit Committee. Regulatory requirements. Specific Supervisory Committee responsibilities outlined in regulation. Ensure that the credit union adheres to the measurement and filing requirements for reports with NCUA board under Section 741.6. Perform or obtain a supervisory committee audit as prescribed in Section 715.4. Verify or cause the verification of members' accounts. Act to avoid the imposition of sanctions for failure to comply with the above requirements. Section 741.6, consistency with GAAP. All credit unions with assets greater than 10 million must maintain their financial records in accordance with generally accepted accounting principles, other words, GAAP. GAAP requires the establishment of accrual accounting, which accounts for income at the time it was earned and expenses during the period in which they were incurred. Mandate to provide financial statements in accordance with GAAP provides for consistent and comparable financial statements throughout the credit union system. Goals of the Supervisory Committee. To meet the general goals, the Supervisory Committee must establish and maintain effective internal controls to achieve financial reporting objectives and to ensure management's financial reporting objectives are met. Determine accounting records and financial reports are promptly prepared and accurately reflect operations and results. Determine that relevant plans, policies, and control procedures established by the board are properly administered. Determine that policies and control procedures are sufficient to safeguard member assets against error, conflict of interest, self-dealing, and fraud. Structure of the Supervisory Committee must have at least 3 board members, appointed by the board, elected by members. All members serve the same length of term, 1 to 3 years. Can be removed by action of the board. Many credit unions rotate volunteers through committee positions at the conclusion of each term. Qualifications to serve. Must be a member of the credit union. Must be bondable by the credit union's bond company. All credit union officials and employees must be bondable. Employees and credit committee members are not eligible. Experience in bookkeeping, accounting, or auditing is helpful. The following individuals are prohibited from supervisory committee by principles of sound internal control: loan officer, membership officer, treasurer, assistant treasurer, president, vice president, or secretary. Supervisory committee powers. If the supervisory committee finds violations of the FCUA, Credit Union Act, Credit Union Charter, Credit Union bylaws, or regulations, the committee should first discuss the findings with the board of directors. If the problem is serious enough, the committee may decide by the majority vote to call a meeting of the members to decide how to handle unsafe or unauthorized practices. Supervisory committee can also contact external auditors or regulatory agency for advice in cases where serious problems may exist. Supervisory committee must take prompt and decisive action if it finds credit union officials are violating the bylaws or mishandling the organization in any way. Supervisory committee has the power to suspend any officer, director, or member of the credit committee. In the event of a suspension, the supervisory committee must call a special meeting of the members to be held not fewer than 7 or more than 14 days after the suspension. Chair of the committee leads the special meeting unless the credit union members select another person. Basic supervisory committee work plan, monthly responsibilities. Supervisory committee work plan monthly. Attend supervisory committee meetings monthly, keep minutes, detail attendance, include facts on reports reviewed, procedures conducted, updates on findings. Attend board meetings or review minutes. Monitor attendance. 3 consecutive absences warrant removal when no valid circumstances are presented. Review minutes to ensure proper board approval, review of required policies reports. Supervisory committee work plan monthly. New loan, closed account, and new account verification monthly. Send confirmation letters. New accounts must be approved by the board and reflected in the minutes. Refer to NCUA Guide, page 2526. Supervisory committee work plan monthly. Review of file maintenance reports. Reviewed for propriety of changes, existing accounts, loan due dates, interest rates, activity on inactive or dormant accounts, supervisory overrides, activity on employee accounts, verify against supporting documentations and/or explanation. Basic supervisory committee work plan quarterly responsibilities. Review of dormant accounts, compare end of report for 2 quarters to test activity. Review staff with override authority. Track the paper trail with sample of dormant accounts. Cash counts, money order, and traveler's checks audit. Review of NCUA 5300 call report. Supervisory committee work plan quarterly. New and denied loan review. Sample of loans should be reviewed. Completeness, proper documentation and signatures. proper perfection of liens, proper disclosure, qualifying debt ratio, adherence to credit union loan policy, compare the interest rate, term, date, and coding in the original documentation to the terms entered into the system, note any exceptions. Sampling of denied loans should meet lending guidelines. Basic Supervisory Committee Work Plan Annual Responsibilities. Review of insurance and bond coverage, review of inventory of fixed assets, OFAC audit, ACH audit, other audits, member account verification, and supervisory committee audit. Member account verification. Conduct once per year or once every 2 years. Notification must be provided with the statements and request members contact supervisory committee with any discrepancies. General notice made in the form of a sign in the lobby. Return address must be a home address of committee member, P.O. box in the name of the credit union or address of third-party vendor. Maintain documentation of procedures performed. Supervisory committee audit certifies that the accounting records and reports are being prepared using GAAP and that they accurately reflect the financial condition and operation of the credit union. Contract with third party to perform audit at least once per calendar year. Committee members should meet with outside auditors to review evaluation of internal controls, review audit work papers, review audit report, inquire about material weaknesses in internal controls, errors or irregularities noted during the audit, inquire about illegal acts noted during the audit, inquire about accounting issues noted during the audit. Conducted to verify assets and liabilities exist. Transactions are recorded accurately. Financial statements are complete and accurate. Ownership of assets and liabilities are documented. Valuation of items on financial statements are appropriate. Classification, description, and disclosure of elements in financial statements are appropriate. Internal controls are maintained and adequately protect the credit union. Determine if procedures from practices prescribed in laws, bylaws, rules, and regulations, or from accepted business practices have occurred. Determine policies, procedures are being followed. Monitoring the lending program, new loans, random checks of loans granted. Verify individuals exist. Verify individual applied for the loan. Verify individual received amount indicated. Existing loans. Verify supporting documentation. Monitoring the lending program. Proper processing of loans. Credit cards. Does each cardholder have a reasonable maximum line of credit? Are lines of credit reviewed periodically to see if the amount is still appropriate? Make sure the board has detailed written policies establishing internal controls. Loans to officials or co-signed by officials. Federal and most state laws set limits on an amount a credit union can lend to its officials. Loans will be reviewed very closely during annual examination. Refer to NCUA Guide, page 15. Monitoring the lending program. Delinquent loans. Ineffective collection procedures can result in serious losses for the credit union. Make sure detailed policies and procedures are in place and are being followed. Charged off loans. Risk due to potential fraud and manipulation. Verify detailed policies are in place and being followed. Examine each charged off loan and determine loan actually existed and was valid. All reasonable attempts to collect on the loan have been made. Recoveries on charged off loans, including those received from the courts, have been properly posted. Supervisory Committee audit, loan review list. Is the borrower within the field of membership? Is the loan under the maximum of both amount and maturity as provided by the law and regulations? Does the loan conform to the lending policies established by the board? Is all necessary documentation in the file? Is documentation fully completed and signed? Was the loan properly approved? Is collateral properly documented and secured? Additional responsibilities. Ensure committee follows plans, policies, and procedures. Review examination and audit findings. Follow up to ensure management takes the necessary corrective actions. Actions taken must be adequate to correct the findings. Review the credit committee. Research member complaints. Insurance adherence to plans, policies, and procedures. No major duties and responsibilities. Attend board meetings. Review board minutes. Study reports, communications from the board. Make recommendations for improving operations, strengthening soundness, and increasing member participation. Review of the credit committee. Credit committee should meet at least once a month. Approve loans within legal limitations and limitations set by board. Grant sound loans. Make decisions based solely on individuals' creditworthiness. Receive adequate information and reports from the board/CEO to make informed credit decisions. Researching member complaints. Handle complaints in an impartial and independent manner. Treat all members fairly. If a complainant identifies a policy or procedure that needs correction, follow through to ensure the board and management implement corrective changes. Member complaint process. Receipt of the complaint. Investigation of the complaint. Review complainant's credit union file. Interview appropriate credit union personnel. Determine validity of the complaint. Work with officials to develop plans to correct any improper, unfair, or discriminatory practices. Have corrective action implemented. Maintain a file of all complaint resolutions. Legal liability. Standards of responsibility. Applicable laws, credit union bylaws, Federal Financial Institutions Recovery and Reform Act of 1989. Knowledge of insurance coverage provided for officers, directors, and committee members. Protecting yourself and your credit union. Know your duties and responsibilities. Know the laws and regulations. Avoid conflicts of interest. Act in the best interest of the members. Ensure periodic audit is performed. Have adequate liability insurance. Supervisory committee performance. Responsibilities to members. Do you communicate on a regular basis? Share the bad news as well as the good. Have a program in place to solicit and resolve your members' problems and complaints. Make sure that no member or group of members is being discriminated against. Ensure that all volunteers and employees are avoiding all conflicts of interest. Provide members with an annual report. Help members understand the role of the supervisory committee. Board responsibilities. Do you review and evaluate board policies on a regular basis? Report to the board when you find violation of the law, bylaws, charter, or regulations. Make recommendations to the board for improving operating practices and strengthening the credit union's financial condition. Respect them as individuals and as a group for their knowledge and the work they do. Auditor responsibilities. Do you make your expectations clear in writing if needed? Keep in touch, communicate with them as needed. Receive comprehensive reports. Provide the resources and other assistance necessary for them to do their jobs properly. Respect them as individuals for their knowledge and the work they do. Safety and soundness responsibilities. Have you ensured reserves are adequate to cover delinquent loans and other losses? All officers and employees who handle funds are in charge of credit union property and collateral are properly bonded. The credit union is adequately insured against fire, natural disaster, and liability. A security officer has been appointed. Proper security measures are in place. Duplicate records are stored off premises. Newly opened, current, and closed accounts are verified on a regular basis. Committee responsibilities. Do all committee members understand the credit union's history, philosophy, charter, and bylaws? Prepare for meetings and the tasks at hand. Do their fair share in the committee's workload. Exercise independent judgment and objectivity. Respect the confidentiality of members' business. Refrain from seeking special favors because of their positions. Avoid all conflicts of interest. Seek to improve themselves by reading and attending workshops. Comply with all laws and regulations. Have a job description for the committee. Receive and review all the reports you need from the board, other committees, and management. Information sources: the League of Southeastern Credit Unions, Credit Union Auditing and Compliance Experts, CUNA, and National Credit Union Administration. Certification available. LSCU has partnered with the LCUL to offer an online, on-demand supervisory committee certification program. If you'd like more information, please contact your member engagement consultant. This concludes our training for supervisory committee members. Thank you for attending.